well. Um, I hope you're doing really, really well. This is BenFx, and it's a wonderful, wonderful cold morning in Zimbabwe. But I do hope that we are going to get this done. So, yesterday I was with a group of guys and we were discussing about risk management. And I thought to myself, I should create a video that explains risk management, but I'm coming from the angle of what is your identity as a trader. So sit back, relax, and enjoy. Remember to like, remember to subscribe, remember to share, remember to leave a comment. I'm so interested to find out what you think about my video, what you think about the things I would have done, I would have said. I'm going to leave a link. I'm going to put my number in the description. Send me a message on WhatsApp. I'm going to put my email there. Send me an email there. I want to know what you think. I'm going to leave a link for my broker. If you send me a text on WhatsApp, I'm going to send you a link to my broker. If you do use that link to sign up with my broker, I will mentor you. I will give you information directly in your inbox as opposed to posting on YouTube. So yeah, let's go. Let's get it. So what is your identity? An identity is something that's important for a trader. You need to find out your identity, and it's going to dictate how you trade. It's going to dictate how you view things. So what is an identity? An identity is the fact of being or what a person is. That means that it's a thing or it's a label that allows people to recognize who you are. It's a set of characteristics or traits, right? Or it's something that people can use to pinpoint and say this person is A, B, C, and D. So you need an identity as a trader. So as a trader, an identity is your self-image. What type of trader are you? It shapes how you interact with the markets. Are you just going to scalp or you're going to swing? Are you going to put big lot sizes or you're going to put small lot sizes? So that dictates how you then approach the market, what your daily targets are, what you're looking for. It shapes how you handle profits and losses. A swing trader is comfortable with handling losses as opposed to a scalper. A scalper does not want to see reds on their MT5. They want to see blues, and blues in minutes. Swing traders can hold losses for a day, and then they know that it's just a dip for a day, but it's going to be profits for 4 or 5 days after. So they're okay with that. So what is your identity as a trader? And having an identity helps you create a trading plan. Do you have a 100-day trading plan? Do you have a 100-time trading plan? What's your stop loss? What's your target? Those things are important. What's your loss management? So as a trader, it's important to have an identity. So there are three types of traders. You've got your risk averse trader, you've got your risk tolerant trader, and you've got your risk neutral trader. So if you are going to invest on the forex markets, on the stock markets, on the synthetic index markets, you have to fall within any of these sections. You're either going to be here, you're either going to be here, or you're either going to be here. So you have to find out which type of trader are you. Okay, so a risk-averse trader. A risk-averse trader is a trader who prioritizes the safety of their account. They are protecting their capital, right? And they're not so much concerned about having high returns. So you get into trade with $100, they're risking just $30 of their account, and that's their stop loss. If they get to $30 loss, they'll stop trading for that day, go rest, go do something, and come back the next day. They've got a tight stop loss, which means that the stop loss is around 30 to 50 pips. So it's a 30 to 50 pip stop loss, and they don't move from that rule because they would rather prefer to lose a trade than to lose the whole account. right? And they live to fight another day. So these guys are saying, I've got $100, I've got $1,000, I've got $1 million, and of that $1 million, I'm only saying that I'm just going to risk 10% of that account or 3% of that account. So that's a risk averse trader. Then a risk neutral trader is a trader who are insensitive or indifferent to risk, right? So the investor doesn't look at the risk. He or she just trades. For example, a person buys the stock of, let's say, Econet holdings just because they love the company. They buy or sell a currency pair or an index pair just because they like it. So this investment, their investment decisions are based on feelings, what they love, what they like, as opposed to analysis. So they just buy stock for A and hope for the best because they know, for example, you're buying a blue chip stock because you know, or you like it, you like the returns, you like how it's just been there for so long. Not so much focusing on the returns, but focusing on the fact that it's been in your life for the past 10 years. You're buying Amazon because you're always on Amazon. You just like the colors, or you're buying Tesla because you like Elon Musk. Okay, then we go to the risk tolerant trader. A risk tolerant trader is one that focuses on high risk and high return. So they analyze the market. They analyze the market. They see that um, price is moving, and price has reached a turning point, and price is coming down. They enter their trade there. But then the thing with these risk tolerant traders is that risk tolerance is very high. They tolerate risk, meaning that they can enter the whole trade here, and they know that the trade is going to go down. It's going to go down because it's reached a peak. So they don't put stop losses. The stop loss is blowing an account. So they've got $100 and they get in with maximum lot sizes because they know their price is going to go down. These guys, you usually find this behavior on scalpers because they know they're trading every day, and in them trading every day, they're looking rather at the profit target. They're looking at the profit target. They want to make $100 today, a day. They want to make $1,000 a day. They enter into 5 positions or 1 position with maybe 20 lot size because they know that they only need a few pips just to get in profit. So this is a risk tolerant trader. They tolerate a lot of risk. Okay, so as a trader, you need to find your identity, you need to accept it, and you need to develop a trading plan according to your identity. A trading plan of a risk-averse trader is different from a trading plan. The trading plan of a risk-averse trader is different from a risk-tolerant trader, which is different from a risk-neutral trader. But the trading goals can be the same in the long run. But they are different in their approaches. But then at the end of the day, all 3 can make profits. But it's about finding who you are and what best suits your trading identity. So you need to find out your identity. So the first thing you need to do is to find your why. Why are you trading? Are you trading because it's a passion? You love trading? Or you're trading because it's a hobby? Or you're trading because it's your livelihood? These 3 reasons, let me just add livelihood there. Or you're trading because it's your livelihood. So these 3 reasons are important because they ultimately decide how you're going to hold losses, how you're going to hold profits. Are you going to hold the trade? Are you going to be a scalper? Are you going to be a swinger? These 3 things are important. So you need to find out, are you here? Are you here? Are you here? Or are you here? The moment you're able to identify which of these 3 you are in, it will affect how you're going to analyze the markets, how you're going to stay in a trade, how you're going to get out of a trade. So these 3 are important. These 3 things are important. Find out your why. What is your why? Why are you trading? You need to discover your trading values. Develop values that govern your trading style? Are you going to have a 30 pip stop? Are you going to go all out? Are you saving your account? What rules do you have? Do you have rules for entry? Do you have rules for exit? You should have a controlled trading approach. What matters most to you? Do you Are you focused on the market? Let's say this is the market. Are you focused on the market completing um, the structure, meaning you find price here and you say, price is going to come down to here? Are you interested in the market completing the structure, or you're interested in meeting a daily target? Like, let's say you want to make um $1,000 a day. You want to make $1,000 a day. So this is going to dictate, are you here on making $1,000 a day? Are you making $1,000 every day? Or you want to look at the market structure? Because either way, it's all good. You can, if you focused on making $1,000, it will dictate the type of lot size you're going to use to get to $1,000. Maybe you don't need price to get here, you just need price to move and come here, and you're done and you're out. But if you're interested in the completion of a market structure, then it means you're going to say, okay, I'm going to put small lot sizes and allow price to move. Obviously, I know price is not going to come down straight. It's going to do this, move up, then come down. You know how price is going to move, and you're okay with it taking its time. So what are you interested in, the structure completion or the profit target? And you have to find out what would make your trading better. Okay, I hope you're still with me. So you need to identify your strengths and weaknesses. What are your greatest strengths? Are you good in technical analysis? Are you good in fundamental analysis? Technical analysis being price action. For example, price is moving like this, right? You see that it's moving within the channel. Are you good at discovering the patterns in this channel? Are you good at finding out, price is ranging like this, so let me get in here, and let me exit here? Or you're good at fundamental analysis. Fundamental analysis, we're looking at news events, we're looking at news reports, we're looking at production reports or things like that. When it comes to currencies, indices, we don't synthetic indices, we don't have that. But in terms of currencies, you're looking at fundamental analysis. So you need to find out what is your best time for trading. Is it waking up at 12 midnight to trade? Is it waking up at 6 or 7? Finding out the best time to trade is important for you. And are you good at money management? Are you good at holding losses? Are you good at holding profits? Do you just get out of a trade the moment that it turns blue and you're okay with that? You need to identify your strengths and weaknesses. Do you have fortitude? Are you able to know that a trade is going to eventually move in your favor? And lastly, what is your emotional content? Quotient, emotional quotient. We're talking about the ability to control your emotions. Are you good at controlling your emotions? If you see a trade in loss for 10 minutes, can you hold it as a loss? Can you see a trade in loss for 6 hours? Can you hold it as a loss? Because you know that it's in loss for 6 hours, but then it will be in profit maybe for 100 hours for the rest of the week. So what is your emotional quotient? Do you just get into a trade because do you get into trade after analysis, or you just get into a trade because you've seen one thing and you've automatically agreed that this is going to get into profit? So, and what you need to also do is you need to get rid of false thought patterns. There is this emotion and this thought around forex trading, that it's a scam, that people don't make money. But there are people making money. There are people thriving, not from selling educational material, but from actually trading on the markets. So you can succeed. You need to tell yourself that, hey, I can succeed. I can succeed. I can do it. I can succeed. I can succeed. You need to find ways of motivating yourself. Check out YouTube. YouTube has a lot of videos. Find a mentor. Find a group with like-minded traders, and you are discussing trading every day. You're motivating each other. You're sharing screenshots. You're sharing setups. Motivate yourself every day. You have your trading journal. You're finding out, okay, this week I traded 10 synthetic indices, and of those 10, 6 closed in profit. That's good. That's 60%. Next week you're targeting 70% or 80%, or you're targeting, you've got your targets and you're achieving them. Motivate yourself every day. Tell yourself that your trade will close in profit. You must have affirmations. When you analyze your pair, you've analyzed your index, and you've done it 3 times. There's this thing that I do now of analyzing 3 times on 3 different days on the weekend, or in 3 times during the day. You do that, and you tell yourself, my trade will close in profit, my trade will close in profit. And if it doesn't, you've got your stop loss to protect you. You need to tell yourself that you deserve good things in life, and you are going to push, you're going to study late, you're going to dedicate hours and hours of study. When I started this, when I was when I started learning how to trade from my first mentor, um, I my mentor would send me notes and videos, and I would study from 8 to 12 for the first 2 months. 8 to 12 for the first 2 months until I got the strategy. After that, every day I was just dedicating time to seeing the market, seeing how the market is moving, trading in line with the market, finding how the market is going. So you need to tell yourself that you deserve the finer things in life. And you need to trust in the long game. Mastering trading will not happen overnight. It took me 2 months to get the gist of the strategy. I'm a BTMM trader, but after those 2 months, it took me every day. It took me every day of looking at the charts to be able to identify, okay, what's a peak. Uh, it took me every day to find out. Sorry about that. It took me every day to find out what's a peak, what's a reset, what's a level. How do I get in a trade? And a lot of painful times, a lot of painful moments, because I had to develop my own strategy. I had to get out of my head and get into the charts and find out, hey, what best suits me as a trader, what best suits me as an individual. So you need to discover what that is for yourself. You need to take your time. It's gonna take you years. It's gonna take you years. This has taken me so much time to be able to master, because I've accepted that trading is really difficult, and there's a lot of money and emotions involved in that. So then you need to invest so much of your time and of your effort. That means when your friends are going out to party, that means instead of waking up at 6 to go to work, you are going to wake up at 3 a.m., give 3 hours of study, then you then go to work. So take your time. It's going to take your time. It's going to take your effort. It's going to take years. It says that you have to study. There's an adage that says that you have to focus on something for 100,000 hours to be able to master it. So put in the time, put in the effort. You have to fight your emotions. The human being is not conditioned to hold losses, and the human being is not conditioned to hold profits. That's the weird thing. We don't like losses, we don't like profits. We've got this flight or fright emotion. So you need to fight your emotions. You've gotten into a trade. You've gotten into a trade at, you know that a trade moves like this, moves like that, moves like that, moves like that. Then you know that you're at the peak and you enter here, but then you know that, and you intend for price to go down like this. But then you know that the broker will not give a perfect a perfect peak or a perfect reversal. Perfect meaning both legs are the same. Some brokers may even do this. Some brokers may do that. Some brokers may come for a third leg. So having the emotions, having the mental fortitude to be able to say, hey, to say I can hold a loss Yeah, as long as the price is within a reasonable range. So you're fighting your emotions, saying, okay, I know my trade. I anticipated this. This is what's going to happen. I know what's going to happen. So you need to fight your emotions. You need to understand that tomorrow might not be better, but you will be present. You need to understand that let's say you say that in a year you're going to be better. It might not happen like that, but know that in a year you have a different mindset. You will know more than you knew in the beginning. And you need to accept that generational wealth building takes time. It takes a lot, a lot, a lot of time. It takes a lot of time to be able to build wealth that we will leave for our children, our grandchildren. So have fun with it. Have fun with it. Enjoy yourself, and know that you are going to succeed. So I'm just going to um, leave my number. This is my number. So get in touch with me, please. Um, get in touch with me, please. This is my email. Send me an email and let's talk. I would so love to talk with you. I would so love to talk with you, find out how you're doing, find out how the market is for you. If you need help, just give me a shout and I will assist you with whatever you need. So thank you so much for watching. This is BenFx. Like, subscribe, share. I hope that this video has given you value. So have a good day. Ciao.